Good morning and welcome to our commercial real estate market review in the future of business office with CBRE's Lloyd Allen, Managing Director and Principal Broker, and Nadia Letey, Senior Vice President and Office Specialist. They will provide a review of our current commercial real estate market, including a review of the current industrial, retail, office, and investment markets. So if you have any questions, make sure you post those in the chat. Welcome, Lloyd and Nadia.
Heidi, thank you. We are pleased to be here this morning. We're pleased to be able to pull together, I think, a fairly good load of CBRE data and review it with you and give you, we hope, some really good insights. Heidi, thanks for the introduction. I'm the Managing Director for CBRE here in Salt Lake and have the opportunity to manage CBRE's brokerage, its valuation, project management, property management activities throughout both the Utah area and Idaho, and also have responsibility for Wyoming and Montana. That's what keeps me busy day in and day out. Nadia, do you want to introduce yourself for just a moment?
Sure. Hi, everyone. I'm Nadia Letey. I am with CBRE, obviously, and I specialize in office leasing. Just handling the Salt Lake City market. However, we range anywhere from, as far up as Ogden down to the Orem Provo area.
Thank you. We've got, I think, a pretty robust slide deck for you today. We'll make sure that that's available there. There are a number of slides that are really put together for reference purposes for you. We won't go through them in complete detail, but you'll have them to be able to follow up on any of the points that we make as you want to. Let me just share with you that the first two slides are a bit of an introduction of CBRE. CBRE is a 100,000 person professional real estate service provider with over 500 offices globally. That gives us the opportunity to not only give a real global scope to what we do, but also real estate is a boots on the ground, local type of business. That's what CBRE looks to bring. And we look to do it with respect to what we call RISE values of respect and integrity, service and excellence. A little bit of an overview for you there. Here is what we hope to do in the next few moments for you. Number one, I'll give a global real estate market review and then take that down to Salt Lake City and talk a little bit about the specifics that are going in our market. I won't cover office. Nadia is the office specialist. As I finish up, Nadia will give an excellent review of what's happening in the local market for office and also talk about the future of office, one of the hottest topics in commercial real estate right now. We hope we get done with enough time to take a third topic, which is a quick downtown crane tour and show you what's happening with all of the building and all the development and construction that's gone on over the last 2 years, some of it just wrapping up right now. And then hopefully a few minutes for questions at the end. Here's what's happening in the global real estate market. And by the way, I like talking about real estate because everything happens on real estate. Whether you're working out of your garage or your back bedroom, or whether you're in a downtown tower, every business ends up dealing with real estate at some level. Now, to understand what's happening in real estate, you've got to look at the global economy. Real estate investment, real estate usage certainly tracks the global economy, usually with a bit of a delay. Let's look for a moment at the overall economy. I'm assuming you can see my cursor here. There, if I can get it onto the right screen. There. This graph shows you last year's forecast with respect to gross domestic production. In fact, you'll see that in 2021, there was an expectation, that's the green bar here, of 6+, some said 6.5% GDP growth. We came in more at a 5.5% GDP growth. And so not quite what was expected. Maybe that's Omicron, maybe that's just a little bit of a too robust forecast. Here is what 2022 looks like as far as a forecast. Still coming in at a high 5 with respect to GDP, but the expectation that we exceeded a little bit. And then you'll see 2023. That's what economists are saying and talking about. Here is actual GDP production. You'll see the 5.5 from 2021, but the big drop in Q2 of 2020, and then the swoosh type of growth that we've seen to where right now we ended GDP year over year production in excess of what you were seeing in 18 and 19 and certainly 20. That's a pretty positive thing for our economy. Here's a couple of graphs that show you a couple of other key components. First, look at job openings. This is what went on in the last 3 or 4 quarters with respect to job openings. The light green line is hospitality. Hospitality came back. You started to see hotels and all opening up. And then overall job openings for the darker line here. That's a positive, strong thing. And a strong economy usually means strong real estate. This is an interesting chart. This shows you the labor force. You'll see the massive drop that we experienced in Q2 of 2020. What is interesting is you look at this, there was not a return to 2019 levels. That's why you're seeing the unemployment rates, the openings that make it really tough to hire right now. Let's turn to real estate for a moment. Here is investment volumes. Whether you're buying the little tiny office building or the great big downtown tower, this wouldn't include investment volumes in residential real estate, but Q4 and 2021 overall saw literally record investment volumes with respect to real estate. In fact, let me look at a note here really quickly. 1.3 trillion in 2021, up 55% from 2020 and 21% from 2019. That is a very impressive volume of investment in real estate. The chart to the right shows you the different sectors of office, multifamily, industrial, and retail, and what percentage of that that 1.3 trillion went into each of those sectors. Cap rates. When you're looking at investment in real estate, cap rate is the language. Cap rate helps you understand what the purchase price ought to be. It helps you understand how much net income you can get out of a purchase price. Notice the constant trend downward. Now, let me say, I was doing a review for a bunch of financial advisors a while ago, and one of the questions came up and said, so what is cap rate? Common term for me, maybe not as common for others, but the way you measure an investment. Cap rate is basically the sales price, the net income in a property divided by the sales price. And it will give you a 10% or a 5% or a cap rate, something along that line, which will help you figure out how to value a property. Notice the constant trend downward with respect to cap rates. These are industrial rates going literally below 6, historically being 8, 9, and in that area. Multifamily going below 4, in some instances below 5 in almost every instance. That is an amazingly low cap rate, driven, I guess, by interest rates and the like. Here's the office cap rate, not as far down. Office has been a more difficult investment over the last couple of years and a more expensive investment in some way. Retail, again, down a little bit above 6. Let me show you the next chart of cap rates. This is one that shows comparing some of the sectors within multifamily or office or retail. Here's an interesting point. There was a gap in Q2 2020 in CBRE's information that said retail just did not trade during that period of time, and thus cap rate information wasn't provided. Overall, a low cap rate means that sellers are getting more money or a higher price out of the property they sell. That means buyers are paying more and having to expect either a slower return or market changes. In fact, some will say, why is multifamily so low? Multifamily was driven low both because of good interest rates, but because of the expectation of being able to raise the rents much faster. Many multifamily properties are on a 1 to 6 month lease rate, where an office property can be on a 7, 8, and sometimes even 10 and 12 year lease rate. This is a graph that shows you basically occupancy. It's called absorption. How much new space was absorbed in each of the specialties? Positive absorption means that the market's growing or use of that product type is growing. Negative absorption means that owners don't have people in their properties paying rent. Look at industrial. Industrial saw its largest and its most significant positive absorption in 2021 as compared to its very best years in 2016. Down below, you'll see retail. Retail had negative absorption during the 2020 period, but came back pretty strong. There's what multifamily looks like, not going negative at all, and that's why you see a lot of the housing prices rising. Here's office. Office was interesting, and Nadia will talk quite a bit more about what happened in office and how the office sector moved in the last couple of years. Now, let me hit just a couple of more key points, although it looks like my cursor stopped working for me. Hang on just a moment there. There we go. There we go. In fact, here was the office graph that I couldn't get the cursor on a moment ago. Let's look at this one. This is actually U.S. industrial marketplace. We showed you the low cap rate a moment ago. Here is the average absorption over the last 10 years and how much above the average we've had for the last 4 or 5 quarters. Let's talk Utah. I've given you, I think, a good overview of how strong the commercial real estate market has been globally. Here's what you can see in Utah. Now, this chart comes from Natalie Gochner and the Gardner Institute, showing the strength of the overall economy in Utah. Note this, most favorable job growth over the year-over-year number, 3.7%, where U.S. has a negative job growth. 5th highest labor participation rate. 2nd lowest unemployment rate. That has its pros and cons. Hiring's been difficult, but that gives you an idea of how strong the Utah economy has been through the last period. Here's what people have been saying about commercial real estate. On the left-hand side, you've got 2 graphs, which is the Price Waterhouse Emerging Markets Report, key real estate indicator of what's going to happen with investment. In 2021, PwC had Salt Lake as the only market west of Texas that was in the top 10. Pretty good number. Dropped a little bit in 2022, but still right up there is number 11. That's a powerful statement with respect to what investments in our local market look like as compared to the rest of the industry. On the right-hand side, this is CBRE's Tech Talent Report. It's a report that looks at the workforce, looks at the capabilities, looks at the tech jobs in an area. Salt Lake sitting in the top 20 is a pretty powerful statement for how good the job market in tech ought to be. And that is a good thing that's driving our economy in a good way. Let me show you the Milken report. This is from last spring. We expect another one in a month or so, but this measures multifamily investment. And note that Provo is number 1, Salt Lake is number 4, Ogden is number 9, and I highlighted Boise since I manage the Boise office. There you go, 4 of our markets sitting in the top 9, 10 multifamily markets. Those are pretty good accolades being passed along with respect to the Utah real estate market. Okay, what does CBRE say about the market? Here's industrial. Industrial has been simply on fire for the last year and a half. A couple of things that ought to really catch your attention. 1.4% vacancy. That compares to about a 5.5%, 6% vacancy nationally. Salt Lake's industrial market is at 1.4%. 12.6 million square feet of leasing activity last year. 4.8 million square feet delivered. Here is what our vacancy looks like, taking us down to 1.4%. 9.9 is what's in development and being built right now. That means that the biggest problem we've got in industrial is any product. If somebody wants to move right now, it is tough to find a place to move to. If somebody's coming in to pick up square footage, they're almost in a build to suit type of situation until some of that 9.9 million square feet gets delivered. But if you look at last year, that 4.8, almost 5 million square feet got absorbed, that 9.9 could move quickly. The bottom graph shows you lease rates in each of the categories, and you'll note that each of them are going up in industrial. Industrial's been the darling, next to multifamily. Retail surprisingly is at 6.5% vacancy. That's pretty low, driven a lot by the difficulty that nobody's building significant retail space, except for some development going on out in the southwest part of our market. Land has had an interesting 2 years. If you look back at 2021, 15 to 20% year-over-year increase in all sectors except for office land. That means industrial land, even good retail land that was selling, and certainly multifamily land was going at 15 to 20% over what it was a year before that. Odd things that a land guy will look at, you now see some industrial space, light warehouse, going for the same price that you would buy retail space in the previous years. Some Class C office land is even being repurposed and getting small flex industrial developed and built on it. Industrial pricing, even higher than some Class C, Class B office in some of the periphery areas. That's an interesting land market, one that we haven't seen before. The investment market for Utah. That number, 3.55, is the total investment transaction value for 2021. Hands down, the largest that we have seen, and a significant level of activity. Highest years before were 2018. I remember back in 2016 when we finally said we're going to break 2 billion, and in 2017 when we finally broke 2 billion. Last year 3.55, and you'll see the color breaking up the sectors with multifamily hands down leading the way. Cap rates for Utah, and you can compare it when you look at the charts for the cap rates nationally. Utah is lower with respect to our cap rates, meaning again, and particularly in multifamily and industrial, sellers are selling for more than what they would expect, and buyers are having to pay more. Last chart I've got, and then we'll turn it over to Nadia to give you a good deep dive into office. This is the multifamily investment chart. Last year, literally 2.6 billion in multifamily transactions. That happened in a market where in Salt Lake, we're dealing with a 2.7% vacancy, Utah County at 2.3, Davis at 2.2, and Weber at 2.4. There are good things coming online in a lot of multifamily construction, but still an amazingly low vacancy rate. That's an overview for you of what's happened globally with respect to real estate over the last year. 2022 has some good fundamentals. I think I identified industrial as being one of the toughest challenges because of the low inventory that is there. But absent some other significant changes, we expect the market to continue, both with respect to absorption and with respect to the investment volume. We expect a good 2022. Nadia, is that a good lead in for you going a whole lot deeper into the office sector? Because that's been a real interesting area for us the last year and a half, 2 years.
Absolutely. Love to give everyone a rundown.
Okay, I'm going to stop sharing and let's see if we can quickly get your set of slides up.
Yes. All right. Can everyone see it all right?
Looks good to me.
Excellent. Okay, thanks everyone. This is the section where we like to pull out our crystal ball and try and figure out what's happening in the future with office. The content that I'm going to cover is a little bit of a mixture of what we're seeing here locally in Salt Lake City, and then what we're seeing trend-wise really across the market, and we kind of touch on any kind of questions you may have at some point as it relates directly to our market. Here's just a quick snapshot of what we saw. This is fourth quarter 2021. and it's updated through January of 2022. The great news in our market is Salt Lake City actually weathered the storm fairly well throughout this whole pandemic. Our vacancy rates are coming down. We are at about 15.7, which is a healthy vacancy rate. Absorption, as you'll see here, in 2021 was a significant adjustment to what we saw in 2020. This dark area here shows the suburban absorption, and then the and this is also suburban with the downtown being kind of in the lighter. And the reality is downtown struggled a little bit in 2020, 2021 not as much, but we are definitely starting to see more activity come up in the downtown. Our lease rates went up. And this is contrary to what a lot of people would have thought. I always get friends and family that ask me, oh my gosh, the office market must be in a lot of trouble right now. And the reality is it's not. We have had good activity in our marketplace. Seeing the rental rates go up, most of our landlords were not discounting rental rates, but we're definitely giving more in concessions, with that being rental abatement to bring effective rates down, so kind of lower the overall cost of a lease. And then they're supplying more in the way of tenant improvements. So as you build out your office with a new lease, landlords are understanding that most tenants these days don't want to come out of pocket on the capital costs to build out their space. So they're having to push a lot more on that, in addition to construction costs escalating quite a bit, as everyone's seen with materials and labor. So we do anticipate that this number is going to go up, especially in the downtown area, as we have the two major towers deliver this quarter with 95 State and 650 Main. We look at rental rates that are essentially determined off of available space. So as we have more Class A available space available, rental rates do escalate. So what we want to talk about is, okay, that's where we're at today. Where do we see the future of office going? And as many of you would imagine, remote work is not going away. So as people figured out that they could do their jobs and their roles, working from home, working from Starbucks, wherever that may be, they're definitely not anticipating coming back in full force, 100% back to the office. Flexibility is going to be key. Employees are demanding it, and employers are understanding that they have to provide it. The digital infrastructure, think about it. You know, when everything shut down, all of a sudden you were stuck with your laptop sitting at your, front desk in your home. And companies have made huge headways in being able to have people work from anywhere. And then also what we're finding is different types of work can be done in different types of places. We're all able to have either this be an in-person meeting or on Zoom. It's something that we never really thought about doing before, but now it's become commonplace. So 85%, it's a big number. Everyone knows that remote is here to stay. And when you look at this next graph, we think it's really interesting. 6% believe that they'll fully be at the office. And then it starts to go up from here, where you see that people are going to see the hybrid. This is where people would prefer to work. And there are some that would like to be fully remote. It's interesting, recently, we're starting to see companies determine that they want to bring people back. There was a time when everything first came down that, we saw a lot of subleases hit the market, and companies were sending everyone home. They were actually seeing productivity was pretty high during that time frame. But what companies feel that they're missing is that collaboration and the company culture. And how do you bring new people onto your company and truly train them and get them involved in who you are as a company? So we're finding that the office is here to stay. What's interesting about the workplace moving forward is it's going to change. This used to be the end all be all. And this is where you were 5 days a week, Monday through Friday, depending on your work time, 9 to 5. But it's going to change. So, you're going to have the home as an option. A lot of places have project offices, meeting on demand, similar to what we're doing now. Flexible space. You saw the WeWorks, the Industrious of coming into our areas with Regis. So this is something that we're starting to see, companies might take more advantage of. So being able to have that co-working and flexible space. You could work from a gym or cafe. You never thought you could before. And your employer used to think that if you weren't there, you weren't working, but that's no longer the case. And then we also saw, as many of you heard, during the pandemic, people just kind of went from their headquarters. So you would see people that were based in San Francisco all of a sudden be in Park City, Utah, and they would work from there. So we're finding that as the labor market kind of dispersed during kind of the crux of the pandemic, that now companies are looking at opening satellite offices. And we're actually the beneficiary of this in Salt Lake City. And we're starting to see companies move in from their headquarter locations and open offices here. People have found that they like certain places to live. So, so that's been an interesting dynamic as well. So there's a couple of ways to look at it. You have office space, which are people who are supposed to be in the office majority of the time. And then you've got the hybrid that we've been talking about, which, you know, I want to point out here this guided flexibility versus full flexibility, and then virtual first, where there are going to be plenty of companies that still support the employee working 100% remotely. Again, it really depends on your job and how you function within the company. But this graph is an interesting one because it shows this is small, medium, and large companies broken out, as you can see from an employee count below. 80% of large companies are going to be moving forward with a hybrid guided flexibility. So we are hearing a lot of our clients trying to determine exactly how they're going to do this hybrid, whether it will be, you know, Monday, Wednesday, Thursday, whatever it may be. But it's interesting because you're hearing some people saying that, you know, at first we thought they do 50% coming in every other day, but the whole goal of coming to the office is the collaboration again. So we're not seeing a decrease in desk use as much. It's just a matter of how often people are going to be in the office. And you can see here, I don't think anyone as a company side is truly interested in being 100% remote. So the other thing that we're seeing as a trend is a change in how we design space. So as office leases are rolling right now, we're starting to see people take advantage, as we mentioned, the tenant improvements that are coming into play. That's what the landlords are going to be putting out there, essentially to redesign offices. You know, there are some offices that are not going to change too much. You know, you'll see law firms will have their standard, you know, offices around the border. But a lot of, you know, some financial based firms and obviously tech are going to be looking at how their employees function best when they are in the office. So you've got activity-based work that you'll see here, and this me space that you have, as you can see, is more of their desk space. And this is all based on how people function within a company, what their job role is. Team-based work, so you'll see this me space decreases slightly with a major increase in this we space. And as you can see, you know, it's a lot of huddle rooms, conference rooms, different areas that people can gather and start to collaborate. And then event-based work. And this is a trend we were starting to see a little bit before the pandemic hit. And, you know, it was coming a lot from markets like San Francisco, out in California, some of the larger markets where a lot of the designers were starting to do more amenity-based space. You know, it was a few of us that could just take a laptop and go plop down on a couch and get our work done and function as well as we could. But again, we learned a new skill throughout the last couple of years. And this is something that some of the workforces are looking at doing. So a big change, and it depends on what the company does, how they function. But again, really the design is going to be based on collaboration. Corporate culture that we talked about, so important. And really the office is the best way to truly kind of provide that to people. Employee engagement, and then talent attraction. You know, our labor market in Salt Lake City is pretty tight. So this is going to be something that's even more important for companies, is to create a cool space, have that great branding that the office is very much part of. And so here you'll see a graph again. Very few companies are not changing. Some of the smaller companies, they have a little bit less space to work with, so they may not adjust their workplace as much as the larger companies are. But you'll see majority of them are really looking at, workplace strategies. We actually have this as a function in CBRE. It's a great group that comes in and starts to meet with your company, understand how you function. And I actually think moving forward, this is going to be more and more important for people to be able, because a lot of us don't understand how we're going to function moving forward. So this group actually comes in, meets with companies, and starts to understand that and interview your employees, your C-suite, whoever it may be, and tell you how you need to design your space to truly function as best as possible in your office space. The other thing that we talked about, and again, today is a great example, enhanced video conferencing. So as offices are being redesigned, the AV side of it and the technical side is definitely going to be changing. You're going to be in an office potentially, or a meeting where you're going to have, 20 people sitting around a conference table and 20 people on Zoom, which is very different than what we were dealing with previously. You'll see some things like smart building systems coming up, a lot of touchless technology. And then occupancy sensors. This is something that's interesting where, people, offices and employers are looking at who's actually utilizing the space that they've redesigned. Employee experience app, there's a lot of landlords that are even looking at this. And then air quality sensors, and we'll talk about that a little bit later on. By far, what we're finding, and this is in tenant build outs as well as landlord provided amenities within buildings. We got to find a way. People want to have a hybrid mix, but we got to find a way to entice people to come back to the office. I love this quote: if you only provide a basic workplace, you should have the expectation the employee experience might not entice people to come back to the office. So as people are looking for office space right now, this is something that's truly important to them. I wanted to show you a couple of photos. This is a building that we work with in, it's called the Salt Lake Hardware Building. Many of you are probably familiar with it, but pre-COVID, they actually had plans to do this. We had a fitness facility that was constructed. They enhanced the common areas of the lobby, and then also put in tenant lounges. And this is something that we're finding in most properties that landlords are having to provide. So not only are tenants building it into their space, but projects are really trying to create cool space that people want to be in. And as you look at this graph, this is a Salt Lake to Provo net absorption. And as Lloyd mentioned earlier, absorption is essentially where people are leasing office space. So where that's a positive absorption. And this line here is Class A. And you can see there's a marked difference of where the absorption is going. And that truly is the flight to quality that, you've heard that before, but it is absolutely something that companies are doing. And some will even try to decrease their footprint slightly, pay a higher rate, but then their overall costs are kind of comparable. So people are trying to get creative in how they get to that Class A space and create that environment that people want to be in. Desk sharing is something, we talked about that me space. It really does depend on how you function and how you work. Hoteling is what we like to call it a lot, where essentially you don't have your specific desk, but when you come to the office, you're, given your desk number, and that's where you go for the day, and that's where you work. And, before COVID, people, about 43% were considering it, but you'll see that there is a huge difference. And, these are actually a little bit dated with September of 2020, but really just showing the trend of what people are considering. So this here, I think, is a great graph to understand. Again, you've got your dark is the large companies, medium and small. So targeted mobility. So a combination of dedicated and shared seats driven by work style and function needs. So that's something that majority of large companies, about 50% of them, are going to start incorporating within their design. And then activity-based, how do you work? If you have salespeople that are out and about majority of the time, they may not need their own desk. But if you have someone that just really kind of hunkers down and gets to work on things, you're probably going to have more of a targeted aspect for them. And then hot desking, which is what we essentially talked about with hoteling. So the other aspect, I think when COVID first hit, we saw a lot of companies talking about the 6 foot and how do you redesign, this dense office space that everyone was doing previously. This was kind of where we were going. And when we looked at office density, parking became an issue. People were just getting crammed into these smaller desks, working elbow to elbow, as it said before. But this is more of what we're going to be seeing moving forward. And as you can see, again, it's more activity based. So, your size or, your take of your square footages may not adjust that much, but really it's trying to get people to work together in the way that the furniture functions. And I know our counterparts in the furniture world are working diligently. They have amazing trends and information that they can provide to you when you're designing your office space. So definitely lean on them as well. But the thing that we like to see is design changes in hybrid work may not mean decreased workspace. This is one of my favorite graphs. This is something that shows our office using employment and the trends from 2011 to 2021. And we didn't really skip a beat within this time frame. And as you can see, it continued on the rise. There was a little bit of a flat area between 2019 and 2020, but nonetheless, we didn't lose jobs and then we increased. So what some companies were finding is by the time they were bringing back and ready to come back to the office, they didn't have enough desks for everyone that they had hired. So it's been an interesting dynamic to see how people are working with that, because the first thing you would think of in this kind of realm of what we're dealing with in office is that people are downsizing, but that's not necessarily the fact or the truth. This is a great, we have an economist at CBRE that we love to listen to, and he took this slide to look at, okay, an average 10,000 square foot user. Okay, this is a 2018 versus future. So this is how many days in the office, and this is the adjustment. So based on that, you take your square footage down to 7,600. Well, then you have the efficiency factor. We talked about design and how that's going to change, and there's going to be a lot more amenity space or collaboration space. So that takes your square footage back up to 8,700. And then you've got your de-densification, which is again what we talked about with having more elbow room, more activity-based planning. Takes you to about 9,100 square feet. That's just a 10% decrease. So really, it's not this huge dynamic of decreasing office space like a lot of people think would be happening these days. So with COVID, another thing that really came top of mind to people is, you look right here, indoor air quality. We saw a lot of people putting a lot of emphasis on how their buildings were going to be. We all know that when you have, for a while, LEED certified was really important, but there's different wellness ratings that you can have in a building that aren't necessarily LEED, that people are really interested in. They want to make sure that when people are designing buildings, that they are state of the art in how they deal with HVAC and air handling. However it may be, as you saw with some of the touchless entry that you'll see in some of these buildings. So building design and wellness is definitely something that is becoming more and more important. People just want to make sure when they bring their employees back to the office that they're providing the most healthy environment that they can for when they're bringing them back in. And this I thought was a great slide to show, net zero carbon commitment. And these are a lot of major companies that you'll see in here, Nuveen, and there's a few of them that are here locally, but by 2040, and that's not that long away from now. So these major landlords are definitely putting this into focus. And then lastly, want to talk about how your employer focus is adjusting slightly. And a lot of companies are putting together a specific role that's going to address this. For so many times we had either the director of real estate or the director of HR, and those are the people that we would work with when we would go to the market with office space and figure out how to design their space. So we're seeing this is more of like a chief places officer. So almost a C-suite type role where people are coming in and trying to figure out, okay, what's the new dynamic, the workplace strategy. So this is something we're seeing more of, and we think is going to be more important because the decision moving forward is not going to be easy. And it's something that everyone's trying to navigate and understand the differences of how people are going to be working and what the market dynamics are going to be. So Lloyd, I know you like the Salt Lake Crane Tour. You want to kick this one off? I'll run the slides for you.
I'll kick it off a bit. Nadia, a couple of key questions that came in. One, it asked, were the rates that we were quoting A, B, or C? I responded and said, they're an average rate, and we can send a report that will break it down both by submarket. We got 7 or 8 of them in our report, and by A, B, and C. Did I answer that question right? You're the office specialist.
Yes, that is correct.
Okay. And I'll stick an email or my email in before we finish the chat. And if you'd like that office report that was just published 2.5 weeks ago with all of the 2021 data, happy to kick that in. Nadia, there was another question about seismic ratings with respect to wellness in buildings. Okay, I'm not an earthquake expert, although I can tell you in 2021, we had everybody at CBRE on a Zoom meeting in the middle of the earthquake, and I think I kept it together pretty well in the discussion there. But what are you hearing about seismic ratings? And then we'll jump into the crane tour.
You're right, Lloyd. I mean, the little shakeup that we had definitely brought that out a little bit more, but we're not seeing that increase any more so than it was really beforehand. Landlords are definitely, addressing that in office buildings. Even a lot of our historical ones are working diligently to work with, engineers to figure out and ensure that they're providing a safe work environment for people. But I wouldn't say that that's increased any more so really than what we were looking at before.
Okay, Nadia, I'm going to keep going on a couple of questions and we'll still get to the crane tour. Let's see, I think they said disinfecting and cleaning, disinfecting, other issues. What are you seeing in Class A buildings? And that's part of, I think, the flight to quality is not just air quality, but what else would you add to that you're seeing in?
Yeah, I mean, that's a great point. And you're right. It is also part of the flight to quality. Most of the Class A buildings that we have in this area, you'll see day porters coming through and cleaning on multiple times a day. So it's not just a single touch point. I know in our office, and Lloyd, you're very familiar. We have the card that, as soon as you come in, you turn it around and it, you say that your desk, even though we haven't gone to the hoteling, but someone comes in and, sanitizes your desk every night if it's dirty. So, or being utilized. So I definitely the Class A are going to be the buildings that you're going to see the enhanced focus on janitorial with the day porter staff that they have. The touchless aspect is another thing. You're not going to find that in most B and C buildings. The other thing that kind of became a hot topic was the filtration for HVAC. A lot of companies going in and demanding MERV 13, which, some of the older buildings couldn't accommodate, but the newer ones with their HVAC systems were able to bring those in. So.
Excellent. Okay, I'm going to give 2 sentences on missing workers, and then we will go to the Salt Lake Crane Tour. The question said 3 million missing workers that didn't come back after 2020. Great question of where are they? I think you could ask almost every employer, everybody who's out hunting, saying, where are those 3 million people who were working in early 2020 and didn't come back to work in late 2020. I think it's just a combination of whether people decided to retire, whether they thought that they could, work less and so change jobs. One of the big positives that did come out in December was that Utah's participation rate had again creeped up in a positive way, meaning late last year, even with Omicron, we saw a few more people coming back to the workforce. And we hope that continues. You like a low unemployment rate, but you don't like it so low that employers can't take care of their clients and customers. So we hope that improves. Here we go, Downtown History Tour. the skyline of Salt Lake. In fact, I sat here for a moment with the Olympics going on. I looked at a few 2002 Olympic pictures, and goodness, Nadia, am I right that the building we're in, 222 Main, was not even here the Olympics 20 years ago?
No, that 222 was constructed and it was started 2007, completed the end of 2009.
Well, that's an example. If you roll back 20 years, but you can even roll back 3 or 4 years, and Salt Lake skyline has changed tremendously. This is a look at downtown. It's looking west from probably about 7th East or so. You'll see numbered buildings along the skyline there that are new and different. And we'll take just a minute and roll through them. Nadia, I think I've got the first couple ones, and then you've got the last two. Let me share with you the first couple. And these sit in a category that are unique and different than Salt Lake has ever happened. In fact, if somebody's been in Austin lately, my kids who live in Austin will tell me that Austin has all the culture, and then I remind them that Salt Lake has all the infrastructure with our light rail and our airport and the like. But what's different between Austin and Salt Lake is the downtown residential living, and that's changing. This is a picture of Astra Tower. You've seen it in the paper as Kensington Tower for the last couple of years. 39 stories, 380 downtown residential units. The hole is being dug. You've seen Second South blocked off as they've taken utilities in. That's going to be a phenomenal new building that watch it go up over the next 2.5, 3 years. The next one, the West Quarter, sitting on 3rd West, kitty corner from the, I'll still say Delta Center. That's not the right term, but I'm aging myself a little bit. Again, 240 downtown luxury apartments, 11,000 square feet of retail on the bottom, and a second phase that is an office tower planned behind it. Third is also a downtown residential tower. I think we got Liberty Sky. Liberty Sky opened up Q4. This is a Boyer Cowboy Partners development. Again, downtown residential living, and not just the concrete with 3 or 4 stick-built platform levels above it. These are downtown towers that are residential living. Big deals and big changes with respect to what Salt Lake will look like. This is the 4th South Maya and Ava project. It's a co-working place with small residential units above. Again, another huge change in what's going on downtown with respect to downtown living. Okay, Nadia, I'll do the Convention Center Hotel unless you want to take it. I drive past it every morning.
No, go for it.
It has been exciting to watch the 725 room, 616,000 square feet tower going up next to the Salt Palace. It is a Hyatt Regency, beautiful development that will drive activity and good things going on in downtown Salt Lake, and a gorgeous building. Okay, Nadia, now I think you are on, right?
Yes.
Here you go.
I'll take it. So 650 South Main. This is a fantastic development. This is the first phase of 2. So each building totals around 327,000 square feet. Again, as we talked about building wellness, you've got LEED Gold certified. So again, touching on that building wellness, and the amenities. Again, talking about what we had already covered, but these guys are going to have a great amenity base. It's going to be a roll-up door going out to the outside for their fitness facility with a great tenant conference and lounge area. This is on 600 South, essentially, in Main Street. So the office tower phase 1 is on the east side. The second phase will be on the west of this project. And what I do want to point out here is this is a great start or kickoff to what we're going to see with the development of the downtown area really moving towards the south. There's a lot of stuff happening out there that's going to start to kind of shift everything a little bit further to the south, creating a whole new dynamic of the downtown. 95 State, this is more of the heart of the central business district. So right off of State Street. You guys have seen it. I believe this tower has actually delivered, and their first tenant who is in there is actually occupying space. Beautiful new tower, bringing over 500,000 square feet to the downtown area. Again, fitness and recreational space. You'll see when you go in there, and many of you have seen the great kind of screen that they have at 111 Main. This is even bigger, and they're kind of creating this great dynamic as you walk by the building. So the downtown area just in total is enhancing the walkability and just some of the basic design of what's going on down there. And then this one is a favorite of mine. I've got a property just to the north of it, but you know, for a while we saw a big cement hole in there that took a little bit too long, but this new developer is coming in. Things are happening. You'll see it's moving along quite nicely. But what we love about this is going to be mixed use residential, 14 stories. And then what we love here is this walkability, this new area that they're creating, and a pathway to get a little bit further east up there. So some great design that we're seeing. You know, these companies are coming in and they're working with designers that truly understand downtown landscape and how you bring people down there and make it an area that's very welcoming. You got
Andy,
that.
do I have the last one?
You do.
Okay. The Union Pacific Hotel. In fact, I thought as I was looking through the deck, this is the only one that hasn't broken ground and is not under construction. But it's a beautiful rendering of what the gateway area would look like, and the addition of 225 additional guest rooms. I don't think I've seen an actual construction date on this. Planned, I believe permitted, but that's what the gateway will look like in the future. Those are the things that you'll see going on downtown. If you haven't been downtown and driven State Street or Main Street in the area, you'll find it exciting to see the tours. Okay, I think we're done with a couple of minutes to spare. I think a good meeting is one where you get 5 minutes back versus 5 minutes over. I've put my email in the chat. I am happy to forward some CBRE reports. I see a couple of questions about office, and I'll forward on our set of figures and our market view of what's going on, and that has good detail about the Salt Lake market. We appreciate the chance to cover commercial real estate with you. Again, we like it. Everything ends up going on real estate. And so we find it a great topic to discuss. Nadia, did we miss anything?
I don't think so, unless there's any questions we haven't addressed.
Lloyd and Nadia, thank you so much for your time today. Just so everyone knows, the slides will be made available on the Salt Lake Chamber blog post. And then this webinar will also be pushed out through our website and other channels. Thank you all for participating today, and have a great day.
Thanks.
Thank you.